Hi everybody, welcome to the Cork Credit Union's virtual AGM. My name's Jackie Littlewood, I work for ABCL and we're just supporting with the technology this afternoon. So just going to go through some housekeeping. I'm using two screens, so I hope that's the right one. Can you see them okay, Matt?
We can.
Yeah, fabulous. Okay, so everybody that's joined us this afternoon, so we've got 35 members online. Everybody is in listen only mode. You can type questions into your devices as we go through the AGM if you're using a PC or a laptop, by using the control panel in the top right hand corner of your screen. Click down to the questions tab, click in the little triangle and there'll be a pop-up box there to submit your questions. So you can do this throughout the meeting at any time and we'll be monitoring the questions. If you're using an iPhone, the question tab is indicated with a question mark at the bottom of your device. Again, click into there and it'll bring a pop-up box. And similarly, if you're using an Android device, it's the question mark at the top of your device. There's some handouts in the control panel on the right hand side. So if you click into the handouts, there's 2 documents there that you can download to your own devices. And we will be doing some online voting this afternoon. So I'll just launch a test poll so everybody can get used to the technology. So what is the weather with you today? So this is just a test poll if anybody's just joined us. Members are still joining us as we're going through the housekeeping part of this AGM. So we've got 38 members with us. And the results are instant. So I'll just close the poll. It looks quite mixed for everybody that's up and down the country today. So we've got 76% of members that have voted. And those are the results. So just to reiterate, if you're using an Android device, the question tab is in the question mark at the top of your device. Using an iPhone, it's indicated with the question mark at the bottom of your device. And if you're on a PC or a laptop, it's in the control panel, the question tab in the control panel. So I'll just hand over to David to formally open the AGM.
Hello, and thank you for joining our 5th online annual general meeting, and thank you to Jackie and ABCL for hosting today's session. Onto is the agenda slide visible?
Yeah, Matt's just ready to put the slides up.
Right. Okay, right. This is the agenda for today's meeting. Starting with a section on our brand, which is something new and different, which we hope you're going to like. Through my report, financial reports coming from our Treasurer Grant Mitchell, then Matt Bland with his Chief Executive report, and reports on our various board committees, and some motions at the end around elections to the board and the lottery, and finishing with the annual award, Graham South Award. We'll start straight away with the minute apologies. We've got one apology from a board member. Sam Hale couldn't be with us today. Otherwise, the rest of the board is here with us today. So we'll move now on to the minutes from last year's AGM, which you should have all seen in the pack that was sent out to you, where we need a poll for the approval of those minutes. So we can move to that, please. Not the one about the weather. that all working?
It is all working, David, yes.
Good.
So we've got 78 members that have voted so far, 97% yes, 7 abstain as they didn't attend.
Okay. Thank you very much. So if we can just move on to the slide on our on brand. Okay, all right. Through 2024, we've been, as a board and management team, reflecting on who we are and where we want to go in the future. As you all know, this is our 25th anniversary year, and we have been struggling to maintain the growth that we were achieving in 2020 and 2021, and we've been trying to sort of expand our common bond, and you've approved various new organisations coming into our common bond in recent years, and research that we've seen from that amongst our own members, but also amongst around the whole of the credit union movement. The words credit union are often a barrier to understanding, that people don't really understand what credit unions are or where they are. And of course, as we've, if you all recall from our purpose project of a year or two ago, we are proud and committed to our roots in co-op retail, and our formation all those years ago in a cooperative group with the bank and the insurance company at the time. And if you're all using our website, I'm sure you all realise that it is looking increasingly old-fashioned, and some of the functionality, which we have been trying to sort of steadily improve over the last year or so, it needs some investment to take us forward. So the net result of that has been a sort of decision which the board have come to after some quite lively debates, that we should try a new brand name. And what we're wanting to do today is to announce to you all that, you know, going forward, and going forward means from the rest through the rest of today's presentation to this annual general meeting, we're going to be using this new brand identity that we've been developing over the last few months. And this is one or two of you may have seen it before, most of you won't, and we all hope you're going to like it. So with no further ado, if we just move on, going forward, we're going to be known as the Money Co-op, with the website to get into is themoney.coop. So Matt's going to take you through a few more things about this, and before I come back to do the chair's report for the year. Over to you, Matt. You might be on mute.
Yeah, so that old chestnut. Thank you very much, David, and thank you everyone for your attention. It's been great to see so many of you registering, and I'm hoping partly that was to do with you wanting to see this new brand, which we're really proud of and excited about. Yeah, if those of you with very perceptive hearing may have heard our risk director, Robin Webster, doing a drum roll as David was just about to unveil that there on his snare drum somewhere near Rochdale. But anyway, yeah, we wanted just to show you some of the visuals and assets that we're going to be using with the new brand. So here you are on screen. You can see some of the different colour options. We've been working with an agency called MP & Co, who are a marketing agency based here in Manchester, and they are focused on supporting the social economy, social businesses, and made a particular point of wanting to work with credit unions over the last few years. So they work with a number of our peers in the sector, as well as the Soundpound group of credit unions in Greater Manchester that we're part of, and that I'm going to talk a bit more about later on. And it's their designer, a chap called Sean, who's come up with these images. So you can see on the top right hand corner there different colour combinations, and this is a colour palette that they've created for us, and it's trying to convey the kind of values of the brand. And we had some really nice feedback recently from one of our partners around how the colours were calming, at least in her view, and it's certainly in keeping with what we're trying to do with the brand, to get across the values that we reiterated with the purpose project that David mentioned earlier, about trying to support good financial well-being and good mental health through that. And you can see here on screen some examples of posters. So we're going to be launching a poster campaign shortly once the brand's live, out to all of our partners and the stores, the Co-op stores and other locations where our members work, to inform them about the change and to get that new name out there. So you can see some examples of what they might look like, and then some of the social media type assets that we're going to be using as well to promote the credit union. And overall, really, it's trying to modernise and improve the kind of the impression, that first impression that we give as a credit union when we're going out there talking to people and advertising and what we can do to support people online. But as David said, it's, you know, we're very keen to ensure that we're maintaining that link back to our roots, with the Co-op very much front and centre in the name, but with the credit union language, which can be a barrier, we kind of put into the background. So, you know, we're still a credit union, we'll continue to be, and we're going to talk about what that means for people. But we're hoping that by removing that from the trading name, at least, that'll make our service more accessible to people. Here's a few more other examples of how it might be used, and so the plan is from late in February or early in March, depending on the finalising the details around the new website. We'll be launching a new website in the new brand. You can see here what it might look like on your phone device when you're navigating to the app that we'll be updating with the brand around the same time as the website changing. And you can see what the website might look like on a mobile device there, as a sort of dummy image in the left hand corner. And here's some examples of the new homepage for the website. So one of the things that we're really keen to do is to make sure that the imagery that we're using on the website is really authentic and reflects real people. Some of the earlier versions that we went through when we were going through the process during 24 and the consultation we did with some members, some of whom are on the call today, and with partner organisations, is that, you know, it's really important that people feel reflected by the images that we're using. So this particular image here is a stock image, but we've also got some real members. We did a bit of a photo shoot a few weeks ago with real members who were very kind enough to spare an afternoon, and not exactly the most enjoyable experience necessarily having your photos taken. So we're very grateful to them to come and let us take the picture, and they told us a bit about what the credit union's done for them over the years as well. So we'll be using those as case studies. But that's kind of really important to us, to make sure that the imagery that we're using is reflective of the members that we serve, and so we're proud of this homepage here. And here's another example. So we're keen to emphasise and continue to build on the tools and support that we offer alongside the core savings and loan service. So your money toolkit here, you can see, is where we're going to provide all of those added values services, like the benefits calculator and the budgeting tool and other facilities, as well as you know, deepening and broadening the range of guidance and advice and blogs and so on that's going to be available to you know, to access tips around how best to manage your money, and demystifying some of those technical terms you come across with financial services and banking and so on. So yeah, I think that brings to an end the summary of the brand. I hope you like it. Maybe before we move on to the rest of the agenda, we could perhaps pause there and see if there's any comments from any of, or questions from any of the members on the line. I'm not sure, Jackie, if I can see the questions. I've been trying to find them as David was introducing the meeting, but might have to rely on you letting us know when there are questions that people want answering.
Yeah, we can't hear you, Jackie. Give her a
Better?
moment. Yeah,
Yeah.
I've got you. Yeah.
Yeah, sorry about that. Yeah, so we've got a wonderful title. Oh, there's quite a few coming now. Wonderful title. Love the new branding. Are we going to recruit Coventry and Building Society? Are we going to recruit Coventry recruitment? Bet you can guess who that's off. Also love the colour palette. Not only calming, but it looks feminine too. It's really exciting to have a great new brand and website. What is your plans to share it with the world? What have you got planned in terms of a marketing calendar over the next year? The changes made since the forum have also improved it, and the colours in particular. So there's no questions, it's just lots of positive comments.
Thank you. Well, so just in terms of some of those points there, in terms of the plan, so as I mentioned, we'll be launching the website once it's ready to go. So we sort of, Mel Phillips, my colleague who leads all our marketing and business development activity, has been working furiously on this over the last few months, really, and so it's still a work in progress, but we're getting there now. So we're all on track to launch around the end of February, early March, and thereafter, you know, we'll be working with the agency we mentioned on a marketing campaign strategy around both ensuring that our existing members are aware of the change, what it means or doesn't mean. In fact, you know, it's an updated image, but the services will remain the same, of course. So making sure everyone's clear on that. And then really the whole purpose of this was about trying to broaden our horizons. So, you know, as David said, we're very much committed and will always be to the co-op retail sector. But we want to also, you know, be more accessible to those people within our common bond who perhaps with the old branding didn't necessarily feel that, you know, it was something for them. So one of the experiences that led to us deciding to make this change was our engagement with the USDOR trade union membership. And of course, some of those people work within the co-op, but many of them don't. And we did find that talking to USDOR members at their annual delegate meeting, for instance, which is something we attend every spring, you know, that people didn't, if they weren't a co-op colleague, didn't necessarily feel like this was something for them. You know, they were a bit confused by why we were there and why we wanted to talk to them. So, and it's not just the retail sector and the USDOR membership. We've also got quite a significant opportunity, we think, in the wider social economy. So other types of co-ops, those that work for them and the members of them, and also the charity sector, where we think there's an opportunity and a real alignment of values. And we're already in conversations with a number of charities based here in Manchester around how we can start to engage with people that work within those charities, and so it's part of a broader strategy around, as I say, broadening our horizons and making the credit union, you know, something that feels like it's for everyone, as well as, you know, addressing some of the shortcomings that we've been aware of for some time with the website, which is very out of date, and so we're really excited about having a, you know, a much cleaner and more professional and more modern looking shop window on the world. So hopefully that kind of addresses the points people were raising. Oh, there was the Court Bank Coventry Building Society question as well, wasn't there?
Yeah.
The Court Bank have remain and have been since we were founded a key partner of the credit union. Anyone working within the bank can join our credit union, and that will remain the case. But we're really excited about the change that with Court being taken over by Coventry Building Society, having been owned by private sector investors for some time, and we hope, although it's early days, that will mean we can start to do more for Court colleagues and for Court Bank colleagues, should I say, and for those that work for the building society too. So obviously that depends on how things pan out with them, and we're not directly in control of that, but certainly it feels like it should be an exciting opportunity for us to reach more people. Well, thank
Thanks,
you
Matt.
for all that positive feedback. I'll hand back to David for the chairman's report, and as we progress, as you mentioned there briefly, you'll see the rest of this presentation has been done in the new brand. You'll have seen as well on my email yesterday that we'll be publishing our annual report to all members. Again, that's been designed in the new brand on Monday. So that'll be the start of our kind of process for letting all the members know about what we're doing and why. Thank you, guys.
Yeah, just one more question, Matt said. Only a question or more a request is, can we please be hyper vigilant on our social media feeds, as a change in branding might prompt some scammers to try to reach people. Just monitor what's going on and the comments on our socials.
Yes, we did. We were just having that discussion just the other day, actually, in terms of whether there's a potential for this to be abused by nefarious forces. So yes, thank you for that point. We're very much alive to that risk, and we'll do everything we can to ensure people know who they should be speaking to and who they shouldn't.
Yeah, fabulous. Thanks.
Okay, thank you, Matt. Thank you for the comments coming in from you all. Keep them coming, and we can come back and have a look at other comments and questions a little later on the agenda. Okay, so on to my report for the year. Starting, it's a comment I think I've made every year since I became chair. It's been another challenging year for both the credit union and I think also for our members. Whilst the worst of the inflation, I think, is now behind us, real incomes are slowly beginning to grow, but the cost of living, I think, pressures remain very high for a lot of people, and also the amount of indebtedness across large sections of the population is once again is a big issue. So it's been a tough year. Our loan numbers have been pretty much flat in this financial year. We're still approving 3,000 new loans to members, which is an impressive number, what I'm particularly proud of, that so many members are getting the help and support they need from us. But we are finding that in a lot of cases we aren't able to help. That another loan is perhaps not the solution for that a member requires. But in those events, we're doing our best to sort of offer support and help, and direct it to other people who may be able to help people when we can't. This is really because the savings side of the business, while it's growing again after a decline through the sort of the cost of living crisis times, but the money we lend is the money people save with us. So we have a duty not just as a board of directors, but also with oversight from our regulators, that that when we lend money, we lend money responsibly, and to protect the savings that our members have with us. Losses of, you'll get more from this from Grant in a moment, remain under control, despite the challenging times. We have started the process of improving the technology for the vast majority of our members. Access to the credit union, load applications, savings with us, taking savings out when you need, is now online or through the app. A few years ago when I became chair, that wasn't the case. It was almost entirely over the telephone and through the post. So we have made some big steps there. We are a relatively small financial institution, but we aspire to sort of look in terms of the way our website works and our app works. We aspire to sort of look like a one of the much bigger brands in the financial industry. And as you've just seen, we've been very busy during the year on this brand report and the setting up this marketing project, which, as Matt has said, will be coming in the spring. And in summary, I think we continue to focus on supporting our members as best we can and as many members as we can, and we're in a strong capital position. We are well positioned to to grow further, to expand our membership, to offer new services. So we are confident about the coming year and the remaining years within our sort of 5-year planning period that we look to. We'll just move on to the next one. So a big thank you to our staff and our volunteer directors. That's a picture of us all at an event we held early in the year within Co-op Group headquarters, and especially to Claire, who is down in the front row, on the right hand side of the slide, fourth in. Claire has been our secretary for a number of years, and has been involved with the credit unions for a lot longer than I have, and been a stalwart of the Co-op Credit Union. Claire is standing down today as our secretary. She's got a very full working life and family life away from the credit union, and she's decided it's time she gives the credit union a little break. So a big thank you to Claire. We'll miss you, and hope we'll see you soon. And to the next slide, and my final big thank you. Thank you to you, all of our members. This is your business. You own us. It's run for you and effectively by you, because we are all members as well. So thank you very much for your support and your everything you bring to the credit union. And we now move over to Grant with the financials.
Thank you, David. So our annual accounts for the financial year ended 30th September 2024 are available in the meeting papers, but I'll just talk very briefly through the highlights of those accounts. Our surplus for the year was reduced from around about 100,000 the previous year to just under 10,000 this year, really as a result of our decision last year to better reward savers, both through the dividend we paid last year and also the interest on the regular saver account. But surplus is still surplus, so that's good news, albeit much reduced. We also were pleased in the year that we were able to stop the shrinkage stop the outflow in share deposits we'd seen in the previous year. So share deposits this year grew slightly by 3.5%. The loan book also grew very slightly, but it was essentially flat, just 0.18% growth in loan book. And inevitably the tough conditions in the economy do make growth difficult at the moment, but we're pleased to have still made a surplus, be showing some growth and stability. We're very pleased that bad debt was kept well under control. Bad debt figures actually fell last year compared with the previous year, so responsibly lending to keep the bad debt low. And a very strong capital position, so a capital ratio, which is the kind of key measure, over 11%, which is significantly above what our regulators require us to hold. And we continue to take a prudent approach to accounting, and continue to focus on trying to find ways to grow through internal investment, which is a bit of a slow burn. You have to spend money to invest, as we've seen in the new brand, new marketing, and so on. Spend money on things like that in order to grow in the future. If we can just move on to the next slide, please. KM Accountants are our auditors. Mark Heaton, the managing director, managing partner of KM, is on the line. He is the partner who reviews and signs our annual accounts, and he's available if anybody has any questions of him. So we've got a clean report on the audit. KM have now been our auditors for 5 years. This is the 5th audit they've completed, and therefore the board decided it was good practice to put that audit out for tender, which we did just towards the back end of last year and into early January. Went out to a number of potential auditors, and we were pleased to find that we still felt, actually comparing them to the market, we get a good service and a good value from KM. So the audit committee and the board are pleased to be able to propose the reappointment of KM for the current financial year. So I don't know, Mark, is there anything you wanted to say at this point before there were then 2 polls, one to formally accept the accounts and the other to approve KM Accountants as our auditors for the current financial year?
Hi, Grant. Yeah, I have nothing to add to what you said. The audit report is in the accounts, and as external auditors, we have no concerns.
Thank you. Jackie, I think we've got a poll or 2 polls.
Yeah, I'll just launch the first one for the financial accounts. There's a couple of questions that have come in as well. Okay. How does our bad debt compare with the national credit union average?
I'm going to pass on that unless either Matt or Mark have any insight into the sort of market trends in credit unions.
Yeah, I don't know. Hopefully I can be heard and seen now. So we do benchmark ourselves against peers in the local area. So we're part of the £7 group of credit unions I mentioned earlier, and I'll mention again later. And as part of the service we get from Mark and KM, we also get some benchmarking information from the other credit unions that they audit. And I think, broadly speaking, we're in a good place. We're certainly not best performing, if that means losing the least as a proportion of your loan book, but of course different credit unions serve different markets, and it isn't necessarily the case that having no losses is good in its entirety. Of course, you have to take some risks to lend money, and so we want to strike the right balance. So we think that we're in a good place. We're certainly within our own internal target and significantly better performing than some of those credit unions we're aware of within our network that have difficulties with bad debt. Maybe one last thing to say on that is that the World Council of Credit Unions recommended target for loan book losses on an annual basis is 5% as a kind of maximum that you ought to try and stay within, and we're comfortably within that. So I think we feel like we're in a good place.
Thanks, Matt. And there was just another one. Do we have a target for growth you're hoping to meet? What are key KPIs to indicate the investment strategy, the investment strategy is working, and what time scale?
Nice, easy one. So I think, unless you wanted to come on there, Grant, I'll give a brief answer. So this current financial year, we're just targeting 8% growth in the loan book, which is not massive, but it's, as you've seen, significantly better than what we've actually achieved this year. And we're doing a number of things which I can talk about a little later, including, of course, the brand and marketing investment to try and achieve that. But over the next 5-year period, we're aiming to grow the credit union's financial size to at least £10 million. So that's about a third bigger than it currently is, or half bigger than it currently is. And then in terms of membership, we'd like to be exceeding 10,000 members. We're currently 8,000 members within 3 to 5 years. So we're not targeting astronomical growth there. Of course, we'd like to go further than that, but those are the budgeting assumptions that we've been making. In the long run, we think that we've got potential to be much larger still, and one of the things we're exploring in order to support that is mergers with other credit unions in our space. So that we hope will be quicker still, but that's the kind of baseline that we're working to.
And I think, Matt, it's fair to say we regularly have the debate at board meetings around how rapidly we are or can grow against the tension of having to lend responsibly and making sure we're only lending where people can afford it. And it's a very live debate and balancing that need for responsibility, both in terms of the credit union's money, but also not encouraging our members to get over indebted with loans that they can't afford.
Okay, there was just one more as well. Seeing savings begin to grow again is positive. How much do we feel this has been driven by the special saver product, and is this savings growth driven by new members or people saving more?
I think the regular saver is definitely part of it, but not the whole story, because the amount that people can save in the regular saver is pretty limited. I think it's £250 a month, and certainly so that's part of the story. I think another part of the story actually is perhaps people not having the same requirement to dip into their savings this year as they did in the previous year or two. We saw quite a lot of outflow where people perhaps had got that rainy day fund and the rain arrived. So a couple of years ago we were seeing quite a lot of outflow. I think this year that has certainly slowed. So I don't know, Matt, if there's any more you want to say.
Yeah, I think it's definitely a contributing factor. Of course, we paid a significantly stronger dividend last year as well as the regular saver, and that's part of it too. But as Grant said, I think it's as much the economic environment around us changing it for the better, thankfully. Obviously still tough out there, as we've said, but equally, you know, people are starting to feel that at least they're not getting poorer in the way that they were when they were having to dip into the savings in the year before. That was definitely part of the picture. You know, people saving less and withdrawing more as a result of rising prices. I think it is part of the broader picture as well, though. You know, that people are seeking to save more and cut their cloth in you know, as a rational response to what's happened around us in the last few years with inflation. And I think that's part of the story with the lending too. You know, that people are deciding to, those that are better off, deciding perhaps not to borrow and save more, to consolidate their finances, having undergone this period of inflation. So we're very conscious that, you know, it's still tough for people out there, and some of that is reflected in the numbers, I think.
Thanks, Matt. So the poll's closed for approving the accounts, and it was 100% yes.
Thank you very much. And then the second poll is to approve the appointment of KM to continue as our auditor.
So we've got 84% of members have voted, and it's 86% in agreement.
Thank you very much. So the final part of my section of the agenda is to propose the dividend for the year. Clearly, in the context of that falling profit that we've seen in the last financial year, and this is a dividend that reflects the performance in the last financial year. And we have to strike a balance between rewarding our savers, but also maintaining our capital strength and not paying out more than we can afford. And in that context, the board is proposing a dividend of 1.5%. We have tested that against the rates available on sort of instant access accounts from the main high street banks, and that's many pay less than that, but that's our proposed 1.5% certainly within that sort of range. So that's the proposal. You'll be aware that we originally launched the Silver Saver account only for the last financial year. We have extended that into this financial year, renamed as Saver Plus. At the moment, that's paying 5% on those balances. That will reduce from March to 4% again. You know, in a falling interest rate environment in the market, and to make sure, whilst we want to continue to reward those savers, make sure we do that in a responsible way and don't pay out more than we can afford. So we now have another poll to approve the dividend proposed by the board at 1.5%.
We've got 80% of members that have voted, 84% it's gone up to, and it's an 89% agreement.
Thank you very much. That concludes my section, and I will hand over to Matt.
Thank you very much, Grant, and thanks everyone for your support, for those votes, and for your continued support for the credit union. So I'm afraid to say you're going to hear quite a bit from me now, so for the next few parts of the agenda. So hopefully I can keep you on the edge of your seat. But as has already been said, you know, ultimately the year that we're reviewing wasn't the year that we were hoping it would be, and that's on the back of a few years of similar challenging circumstances in the economy, and growth not where we'd like it to be. And it is really quite sobering to see, on a daily basis, the impact that the cost of living crisis and COVID before it has had on the financial standing of many in our common bond. Low paid working households, I think, are probably those most heavily affected within society by the inflation that we've seen. To some extent, people in receipt of benefits and other state welfare income have been insulated through those inflation-linked increases to those payments and so on. But that hasn't really fed through for people on low paid work who aren't in receipt of that kind of support, or not to the same extent. And many people carried into the inflationary period that we saw, a significant amount of debt accumulated during the period of low interest rates that went on for a long time after the financial crisis of over a decade, since 2008, which left little room for manoeuvre when prices started rocketing the way that they did. So it's been really challenging in that context, both to grow, but also, having to say no more often than we'd like. And that's why we continue to support people in other ways, and we'll continue to invest in that. We're committed to doing so in terms of tools around budgeting, the benefits calculator that we want to integrate more deeply into the service offering, and the technology platforms that we use to provide the services, and other support, as I mentioned earlier, in terms of the toolkit, the money toolkit on the new website that we'll be launching soon. Is something that we want to continue to invest in and ensure is as comprehensive as it can be, knowing that that we may not be able to support everyone with the loans that perhaps they would like. I think the other thing to say there is that we've got really strong plans around investing in how we make loan decisions, and we're very conscious that it continues to be perhaps too manual, too judgment based, and not scientific enough in terms of teasing out all of the facets and details of how people are managing the finances, and making as reliable and as fair an assessment of affordability as we can. So it's certainly not about us moving to a kind of computer says no type approach by any means. It's trying to harness some of the insights of the kind of the personal human approach to making decisions that we have, but in a way that we can scale and that we can rely on more accurately than what is still quite a manual process that we operate to make those decisions. So we want to try and ensure that we're supporting as many people as we can, and some of the changes we've been making this year in terms of the systems and the software and the app that we've been migrating to. Just recently we started to be able to harness some of the benefits of that in terms of additional insight. So it's an ongoing process as a small business of investment and improvement in some of those things, but we're really keen to ensure that we're getting that balance right, and that means both controlling the losses in terms of lending to people who ultimately can't repay, and as the slide says there, we've had some good success in that regard over the last few years, but also making sure that we're lending to as many people as we can of those people that are applying. So I'm conscious it's not just about mitigating losses and shoring up the balance sheet. We're a credit union that's member owned, and we want to support as many people as we can, and so we've got strong plans to invest in our underwriting software and processes on into the future to support that, which will have beneficial effects in terms of growth, of course, as well. So in terms of some of the achievements that we've, it's not been a year that we've stood still, even though the financials haven't perhaps grown the way that we'd like. So it's said there already, but we've been really successful in recovering and supporting those of our members who fall into financial difficulty, and that's certainly not by being, you know, draconian and you know, and kind of strong on people who are in difficulty. Quite the opposite. In fact, you know, Joel and Joan, our the team that oversees that part of what we do, you know, pride themselves on being responsive and taking real care around people who have vulnerabilities, people who need support and need perhaps a break through no fault of their own in terms of, you know, their life circumstances, and working with people in a positive way to find a solution, and that has ultimately resulted in a better outcome for the business in terms of recoveries, as well as better outcomes for those individuals that do sadly face difficulties repaying their loans with us. So, you know, that's a real success, and I'm really proud of what Joan and Joel have been able to achieve this year, and you know, I'd like to put on record my thanks to them for their hard work in sadly some quite difficult personal circumstances this year too, you know, which certainly doesn't go unnoticed. The wider team as well have been very busy in terms of the migration of our services to the new app and web portal that is now a primary way to offer services to you, for you to monitor your account, make withdrawals, update details, apply for savings or loan accounts. You know, that's been a long process, and it's reflective of the challenge that we have as a small credit union, or, you know, we're sort of mid-table, I suppose, in terms of credit unions, but small certainly in the financial services market more broadly. You know, in terms of how can we access the kinds of technology and the kinds of convenience that people have come to expect as standard on the limited budgets, with the limited resources that we necessarily have as a relatively small firm. And so, you know, it's been a long process of hard work to get to where we've got to, but we're now in a place where we're starting to reap the benefits of that new platform in terms of more efficient processing and ability to reach more people, and more coherent kind of experience for users as well. You know, we were conscious that we had feedback in the past where you had multiple channels to use that weren't necessarily linked together or with the same brand and so on. So, you know, it's been a big step forward, and it opens up a whole range of possibilities for us into the future, because of the way that we can now add to that service, integrate other systems that perhaps in the past we had to operate independently as standalone solutions, that, you know, with all the inefficiency that comes with that. And so we're really proud of that, and we're excited to make the most of it with this new brand and marketing approach that we've talked about already. We've also, over the last few years, done lots and lots of work in terms of governance, our risk management and compliance, you know, and we were really proud to receive a really positive review by our internal audit partners at Alexander Sloan, who are an audit firm up in Glasgow that serves the credit union sector amongst others. And you know, whilst there's still work to do, there always is in terms of this kind of area, you know, comparing where we are now to where we were 4 or 5 years ago in terms of the quality of the governance, risk management and compliance approach that we put in place, you know, it's night and day, and there's a lot of hard work that's gone into that, and lots of contributions from the board and the staff to get there, and it was really positive to get such a good kind of overall review of the progress we'd made. So that was really positive, and again stands us in good stead for hopefully achieving the growth that we want to in the future. You know, we're always conscious that, you know, in order to do that, you know, we need to be starting from a strong, robust base in terms of being compliant and understanding the risks we're running and controlling them effectively. And so we feel like we've got that in a good place. And we were also happy to welcome Heart of England Co-op as the latest workplace wellbeing partner or within the co-op retail sector in the year. So most of the independent societies now that don't have a relationship with a local credit union or another credit union that we wouldn't want to disrupt, you know, are now working with us to provide services to them and their colleagues, and so we're really proud of that, and we're delighted to welcome Heart of England colleagues to that this year. And as I said earlier, a big part of what we're trying to do with the brand and the identity is to broaden that into other parts of the co-op and social economy sector, the charity sector in particular, over the coming years. And finally, we were successful in securing this grant from Fair for All Finance, which is what's helped us do all of this that we've done with the brand, without which we'd have really struggled to make this kind of investment from our own resources. And so, you know, that was really, really positive. You know, we're proud of the relationship we've made with Fair for All Finance. With previous meetings, we've reported support for piloting the Credit Saver products, which we did the year before, the one under review here. And again, we, you know, they've recognised the impact that we're having and the positive ambition that we've got to work towards, you know, better growth in future and some of the things we're figuring out in the background around technology and so on. And they've rewarded us with this grant, which has enabled us to make this significant investment in our brand and marketing approach, which, as Grant said, you know, it's an upfront investment, and the benefits will come afterwards. So we're excited about having that platform to grow. So yeah, before I move on to the next slide, just want to say again, really huge thank you to the staff team for all of their hard work. Most of them, if not all of them, are listening in at the moment. As I alluded to, it's not necessarily been an easy year on a personal level for some of the team members, unfortunately. But the way that the team, you know, there's only 9 of us, and you know, we've got a real strong bond as a team, and you know, it's lovely to see the way that they've supported one another through some challenging times this year, as well as through some fairly challenging projects around the migration to the app, for instance. You quite often hear, you know, in sort of leadership training and management theory that, you know, change is a really challenging thing that many people don't enjoy and resist, and it can be really hard to get it right, you know, and a lot of that comes down to culture and you know, in our case, I've never found an unwillingness amongst the team to get stuck in and try something new and be willing to recognise that, you know, you have to go through a bit of pain in terms of that transition in order to reap the benefits later on. So it hasn't been easy making that shift from the old systems to the new ones, and for a period of time operating different platforms at once and so on. You know, lots of stuff that members wouldn't see, but that goes on in the background. And so again, huge thank you to the team for all their hard work. And it's because of that hard work on the part of the team that, you know, we get such positive feedback from members. And again, this is something we're all really proud of. So last year we reported what was a pretty impressive step up from a net promoter score. So this is a common marketing metric that that all sorts of firms use to measure how well they're regarded by their customers, and in our case by our members. And back in July 22, we do this annual summer survey of members. It was positive 61, which is pretty good, and most brands would kill for a net promoter score as high as that. But then in the subsequent years, it's got higher still. You know, last year it was at plus 75, and unbelievably went up again this last summer in 24 to +81. So that's when we ask our members, would you recommend us to a friend or a family member? And almost everyone is saying that they would, which is just, again, testament to the hard work and the commitment and the sensitivity of the team in terms of the service they provide to you all. So you were really proud of that. And then another accolade we received this year was this Consumer Credit Award commendation. So Smart Money People is an online kind of money website that every year has a Consumer Credit Award in a whole range of different sectors and products and so on. But there's a particular focus on credit unions. But the really nice thing about this award is that it's entirely based on the feedback and reviews of real members. And there's a couple of examples there on the screen, which again just demonstrates that members really like the service that we offer. And that though we'd like to be serving more people and growing and so on, and of course we continue to try and achieve that, it's really great to see such positive feedback coming back from the members about the service we currently offer. So we're really pleased to see that. Maybe before I move on to the next little bit, Jackie, I might just pause there in case there's any questions waiting.
Yeah, so there was one saying, has the board considered mergers or acquisitions?
Yes, yeah. So I alluded to that earlier in terms of one of the questions to Grant's report, I think it was. But it's definitely part of our plan over the next few years to explore whether there may be opportunities to merge. I think in general the board's taken the view that there's a challenge around scale across the credit union sector. Too many of us are too small to have the resources to make the kinds of investments that we probably should to compete and keep moving forward, and that is a drag on growth. But each credit union is an independent entity at the same time with its own boards, and it makes its own decisions. And so, we're certainly not able to dictate any of that, and nor would we want to. So we have been making some inquiries with credit unions that are in a similar sector, a similar space to us, around whether there's an appetite to explore merger. And we are actually in talks with one credit union about a possible merger that, if that proceeds well, we may be inviting you to endorse a potential merger later this year, and there are others that we've been exploring. So yeah, absolutely, it's part of our strategy is to try and identify where there may be beneficial mergers that might support our growth.
Thanks, Matt. That's it for now.
Yeah, okie dokie, cool. Right, please just reiterate that this and it's a bit odd me just talking to my computer, and I know you can't be seen on screen, but it is we want this to be as interactive as possible and for you to ask questions you may have. So please don't be shy if you've got something that you want to know. It doesn't have to be about anything I'm particularly saying necessarily, just anything to do with the credit union at all. I mean, if we can keep it to do with the credit union, that would be good. But we can talk about other stuff too if you like. So yeah, I'll carry on. So next I wanted to just talk about our impact, and this graphic here is taken from our annual report. I mentioned earlier that and on the email I sent you yesterday, we didn't want to publish the annual report in advance of the meeting as we would have done normally, just because we've done it in the new brand and we didn't want to spoil the surprise today. But on Monday we'll be communicating with all members and shouting about the change, and included in the annual report is this section on our impact. And yeah, I mean, these are similar metrics that we've been tracking for a few years. Those of you who are masochistic enough to come to more than one of these meetings may recall some of these metrics from previous meetings. But the top one on the top left-hand corner there is about how much we reckon we save borrowers each year, and it's quite a conservative estimate based on what they might have spent on interest had they borrowed the same amounts from elsewhere. And even though there's been a lot of improvements in the consumer credit market in terms of curtailing some of the more egregious examples of high cost credit, it's still the case that lots of people get ripped off to borrow when they're in a vulnerable position. And so over the last 4 years, we reckon we've saved our members £1.65 million in interest. That's based on an annual saving last year of 350,000. And we're really proud of that, and it's really important part of how we enable people to build financial resilience, through reducing what they pay to borrow and therefore creating an opportunity for them to start a savings habit, which is really, at the crux of financial well-being, having some savings set aside. The benefit calculator we've talked about already. You can see there is just how significant it can be for people to use that tool. £835 on average. People who went through our version of the calculator could be claiming in benefit and tax credit income that more often than not they're not currently claiming. You think about some of the pressure on household finances and the stuff that we've already talked about in terms of the economy. That could be transformational for someone's financial well-being. So 286, we'd like that number to be bigger. So as I said earlier, we've got plans to try and integrate that more closely into the rest of the service so that we get a greater uptake, because that kind of impact is huge, and we think there's many more of our 8,000 members who could also access that kind of additional income. And now you've got a little graphic there, sort of in the middle of the screen, where it says 57%. So 57% of the loans that we make, in terms of the number of loans, go to those people living in the most deprived 40% of communities. So that's sort of on 50% kind of over indexing there, which means that if there's another chart that's not on this screen, but maybe it illustrates it more closely. But if you use the indices of multiple deprivation, we have a kind of a straight line proportion between the more deprived communities and how much of our lending goes into those areas. So we're most likely to be lending into the most deprived communities and so on. And again, we're really proud of that. It's about helping people who really need the help, and that many other lenders are abandoning. So yeah, I'll probably leave that one there. But if there's any other questions about anything I haven't covered on that slide, happy to take them a little later on. And here again, this is taken from the annual report that's coming, and just a little sort of montage of pictures from the year. The one of those you've seen there already, the one at the top left of us all at the 25th anniversary celebration. So that was January 24. We came together at Co-op headquarters to celebrate 25 years of operation as a credit union. I think I saw Chris is on the line. Chris, our founder member, that's him in the middle there, cutting the cake. He just recently, the last few years, stood down from the board, having been there since the beginning. Really proud of having been here for our members for such a long time, and it was a really nice event, and you can see how happy we're all to celebrate there. So you've got most of the board and I think all of the staff team there on the picture. There's a nice one there just below that. There's sort of group number 2, I think, if you can make out the number there, which is the Soundpound group of credit unions. So I've mentioned this a couple of times, but Soundpound is a consortium of credit unions in Greater Manchester that we're proud to be a member of, and they're doing some really innovative stuff in terms of collaboration around supporting credit unions to grow and do more for their members. There's a really exciting scheme that they launched recently of the community credit unions, primarily around helping people get access to bus travel at a discounted rate across a year to get an annual pass, but having a loan to spread the cost of it. And you can just about make out Andy Burnham there on that picture on the far right. Not that he's on the far right, of course, politically, but in the far right of the photograph. And he's been a big supporter and advocate of the role that credit unions can play for the financial well-being of the community in Greater Manchester. What else can we pick out there? There's a few pictures from the ABCUL annual conference. So we're proud members of ABCUL, and I've been the vice president of the board there for some time. I was during the year in review at least, and you know, we want, as part of our commitments in terms of our strategy going forward, to be you know, collaborating and working in conjunction with other credit unions in order to maximise our impact and reach as many people as possible. So our participation in that network is really important to us. And I guess there's a few pictures there of Mel, you can see, and Andy as well, with members at exhibitions. So we've been out and about trying to speak to as many people about what we can do to support them this year. We're excited to be able to do that with the new brand this year. There's a snap there of us in one of the workshops that we did with the agency to back in the spring of 24, when we were starting to think about what the new brand might be and what our strategy ought to be. And then I guess finally the one on the bottom left hand corner, the bottom right hand corner, should I say, one of the, you might be able to make me out speaking there to a group of people with a few chaps sat next to me. So that was an event that we had to promote the opportunity around something called autosave. And perhaps I'll just flick to the next slide at that point, because this is our purpose project commitments. You may recall back in 2022 we launched a document which came out of a process we've been going through for a year to think about what it was we wanted to do to you know, have our impact on a social impact on our members and our community beyond just you know, the numbers that we've already heard about. And this is what we came up with, and we've been reporting back on our progress on these themes every year since. And in terms of campaigning, which is one of the commitments we made, we wanted to be a campaigning organisation, and a lot of our focus in that regard this year has been on that autosave point. I've been working closely with an outfit called Nest Insight to promote the opportunities around automatically enrolling people in payroll savings. So the kinds of services we already provide to our payroll partners, but on an opt-out rather than opt-in basis, so similar to auto-enrolment in pensions. And it's an idea that I think has it's been trialled in a few places. It's been trialled at Co-op with a competitor of ours, WageStream. It's also been trialled at a firm called Suez with a credit union called Transave Credit Union based in Sheffield. And in both cases, it's been proven to be you know, transformationally effective in terms of getting people saving, many of whom have never saved or been able to save on a kind of an opt-in basis where they've had the emphasis on them having to do something. So just making it at the default setting can be can be the difference between saving or not saving, and is in fact the difference for many people. So we're really keen to promote that, because we, as we said already, saving is the best route to financial well-being. We see far too many people in debt because they haven't got any savings. When that thing goes wrong, then they have to to borrow, and no other option. It's also in terms of self-esteem and mental health, having a little bit set aside is transformational for people in terms of their self-worth and so on. And so we're really keen to promote that, and we think with the Labour government coming in and with its commitment to double co-ops and its commitment for a financial inclusion strategy, that autosave is an idea that could transform financial well-being for many low and moderate income households, and in the process could be a real boost to the growth of credit unions as well. So that's been a key focus of our campaigning. We've run 3 now, I think, inclusion and innovation member forums. You saw an image from one on screen earlier during David's report. So it's an online meeting where we bring members together, and those members you saw on screen, some of whom I know are on the line as well, were lucky enough to get a sneak peek at the brand. So that was back in October, November time, I think, and they gave us some really, really valuable feedback, which I was glad to hear in one of the comments that came through in the brand part of the presentation. They could see that we tried to respond with the imagery that we were using and some of the other stuff that we did in response to that consultation. It was genuine consultation. As a member-owned organisation, it's really important to us that we listen to our members and respond to the feedback we get, and that was a real example of that. We continue to comply with the Fair for Finance Affordable Credit Code of Conduct, and we're proud of that. That's about being a responsible lender that treats the vulnerable in an appropriate way. Our social goals around our loans and savings, just under half of our loan book, so we're slightly under the target, but only slightly, is for £1,000 or less in terms of numbers of loan accounts, and more than 2/3, in fact, more than 3/4 of our savings accounts are for £500 or less. And that's about wanting to be, not wanting to abandon those who are just looking for a relatively modest loan or to save relatively modest amounts, because we know that those are the people who need the service most. And some of these areas, like on monitoring our diversity and best practice on vulnerability, we know we've got more to do, but we're proud of our commitment to the cooperative principles. We think that's reflected in the name that we're changing to, and we're working in collaboration with our colleagues within the credit union sector to provide that support on education around the commitment that and the principle of education that's central to the co-op principles, and that we've got that concern for community. It's not just about the credit unions for credit union's sake, it's about us wanting to have a positive impact on the community, and I hope you can see that in the feedback and the impact stats that we've already spoken to. Okay, so now we're at the point in the agenda where there's an opportunity to ask questions about the committees and the committee reports, which is part of the pack that you received ahead of the meeting. Whilst people have a chance to submit, I'll just briefly summarise the 3 committees and what they do. So there's the Risk and Compliance Committee, which is chaired by Robin Webster, who is in his spare time a drummer, as I mentioned earlier. And anyway, he's a very experienced risk professional in financial services, and has been chairing our risk committee for a number of years now, working closely with me to do all that stuff that I mentioned earlier has resulted in a really strong risk and compliance framework that we were proud to get a positive review of this year. We were conscious in preparation for the meeting that the report on risk and compliance in the pack is perhaps a little technical, and there's quite a lot of sort of jargon in there. So if there's any questions that anyone's got in terms of helping you understand some of that technical language, then please don't be shy. We recognise that this is not necessarily something that people would be familiar with, some of those concepts, and if you want an explanation in an attempt at layman's terms at least, then we'd like to offer that. So please do ask if there is anything. But really, it's about overseeing the credit union's risk profile to ensure that we're conscious of the things that could go wrong, which would cause us a significant problem, and trying to interrogate how robust our balance sheet is and our processes and our technology arrangements and our relationships with partners and so on, to ensure that we're alive to those risks and we're monitoring indicators that maybe those risks are going from a possibility to a reality and responding accordingly. Then we've got the Nominations and Reward Committee. That's chaired by Nisha Ravat, who you're going to hear from shortly in relation to the elections to the board. And really that's about the people involved in the credit union. So both the board of directors and recruiting and supporting and developing the board of directors, and also the framework that we use to support the staff, both in terms of pay, but also the policies and and the quality of work that we offer as a business, which is really important to us. And then finally, the Audit Committee, chaired by Grant, who you've heard from already, and they oversee both the external and internal audit processes. So the internal audit, I mentioned already, is delivered by Alexander Sloan, firm up in Glasgow, and they do 3 reviews for us on themes through the year and receive a report which we then work through the recommendations of. So we've, as well as the follow-up review of all of the previous reports that I mentioned, gave us a very positive report this year. We've also done operational resilience and complaints and consumer duty. So some really important and topical themes given the priorities of the regulators. And then as well as that, they oversee the external audit delivered by Mark Heaton, who you briefly saw on screen earlier, and they oversaw a special project just recently to do a tender for external audit services. So that's probably enough of a summary there. I don't know, Jackie, if there's any questions on the reports or even anything else that I could maybe answer at this point, or Nisha, Grant.
There's nothing coming about
Sorry.
There's nothing coming about the committees. There's a couple of comments.
Okay.
But stuff that's gone that you've spoke about in the previous are you okay to take those?
Yeah, of course.
Yeah, I think one's following on from the question about the mergers and the acquisitions. So they're asking Matt, rather, have you explored opportunities to share resources and cost savings in areas like compliance, etc., with other credit unions, rather than an actual merger? Perhaps a mutual support model. I am thinking perhaps this is an opportunity for that from the bank and the Coventry situation, where, say, the union provides support for the larger institutions, unbanked members, and in return the credit union read technical support that might otherwise come to a greater cost. I suppose it's like
well, that's an interesting idea. Sort of collaborating with the bank on that. I mean, we could certainly explore that. One of our board works at Court Bank, Lisa, although I'm not sure. I'm not expecting her to be able to fix that for us. But in terms of the collaboration piece, as I mentioned, absolutely, opportunities to access, resources and capacity that we wouldn't necessarily be able to access on our own is absolutely something that we're keen to do. I mentioned £1, so this year I was leading a process as part of our membership of the £1 consortium to formalise that group as a legal entity. So it's a co-op society owned by the credit unions that use it, which is in effect what's known as a credit union service organisation, or a CUSO. And it's pretty pioneering. I can't claim much credit for the broader initiative. It's been led very, very capably by, in particular, a woman called Sheena Young, who's the chief executive of South Manchester Credit Union. And we are relatively new as members of the group. But it's a real innovation, and the ambition with that is exactly what the questioner is alluding to. Sharing between the member credit unions, resources, and pooling investment so that we can not be reinventing the wheel. There are 14 members. Each of them has very similar needs in terms of things like compliance, for instance, and marketing. And so working together on some of that stuff, we can get more bang for our buck.
Another comment from Tom saying, I appreciate it's difficult to do, but have we considered tracking deprivation levels of those who engage with us, i.e. AGM member forums, etc.? For me, serving members means delivering them value for money, but more people getting involved from communities we serve would be welcome.
Yeah, so I mean, there's the impact data I showed, Tom, in terms of where our members live and the deprivation in those areas. Of course, we can't say for necessarily that they are people who are suffering that deprivation themselves. It's just where they live and how that's rated in the scheme of the IMD index. So recognise that's not the same as perhaps knowing our members individually more than we might otherwise. But it's something that we're really keen to do more on all the time, to improve and enhance the data that we have access to, that we can so we can analyze the business, both in terms of the performance of the business itself, from a commercial sort of point of view, but also our impact. Oh, something's just popped up on screen, so I'm slightly distracted there. Hopefully you can still hear me.
Yeah, we can.
Yeah. So I take the point that Tom's making. We're always looking for opportunities to do more in that respect. And I mentioned some of the investments we're making around loan decisions, for instance, partnering with some new entrants to the space, who we hope will enable us to make more reliable decisions, say yes to more people, grow more rapidly, but also track our impacts more effectively as well.
Thank you. And how much are we using ABCL's public affairs team to push auto enrolments into savings? I completely agree it is transformational, but which we are, while we aren't members, Co-op Party are reviewing their policy process at the moment, and we have tried to engage with them on this.
So yeah, we're definitely talking to ABCL about it. So Joe Phillips, who's the Director of Research and Innovation at Nest Insight, who are the ones promoting AutoSave as a solution, she came to the ABCL conference at my suggestion last March to talk about it, and there's a number of credit unions who are engaged with their work. I know I saw Richard Monroe's on the line, or he was earlier. He represents another credit union, ComSave, in Northampton, and the postal sector primarily, who are equally involved and engaged, and there's other credit unions too. So yeah, it's something that we're all supportive of. There is a real opportunity in terms of the Co-op Party, Labour Party, and so on. With this Labour government now, which has an ambition, as I mentioned earlier, to double the size of the co-op and mutual sector, but also a financial inclusion strategy, which we haven't had since the last Labour government lost power in 2010. you know, to provide a real solid basis for this as an intervention, because I do think it's more effective in terms of getting people saving than anything else I've seen over my 16-year career in this sector. And I've been fortunate enough in previous roles to look at opportunities, interventions that have been deployed elsewhere in the world as well as here in the UK. And auto enrollment works better than most of them, if not all of them. So it's just about persuading the right people, and for our part, we're certainly trying to help with that.
Thanks, Matt. And there's just one question I missed earlier. Do we recognise a trade union for collective bargaining?
In terms of the staff of the credit union, we don't, but only because we're small. There's only 9 of us in the staff team, and I'm not sure we're of a sufficient scale to do a kind of collective bargaining arrangement with a trade union. But staff are certainly not discouraged from being members of a trade union. One of our key partnerships is with a trade union, the Ulster Shop Workers Trade Union, and Nisha's committee, the Nomination Royal Committee, oversees a programme of work which is designed to ensure that we offer good quality work to the staff, and we've got one of the team, we're all happy to say is pregnant at the moment, and we're just recruiting for a member services officer to cover the maternity leave that we know is coming. That's exciting for her, and we're all delighted for her and her husband. But we haven't had to recruit since the current team, the last member of the current team joined about 4 or 5 years ago. We haven't had anyone leave and need to replace them since then. We did recruit Mel Phillips as a as a part of a growth of the team, if you see what I mean. But so we hope that means that we're providing good work that is rewarding, and rewarding our team appropriately for all the hard work that I mentioned earlier. I certainly see it as an indication that people like working for the credit union, because they tend not to leave, or haven't done for the last few years anyway.
Thanks, Matt.
Is that all of them, Jackie?
Yeah, there's a couple of comments to come back to later, but that's all the questions for the time being.
Okie dokie. So I'm gonna bring in Nisha now, because oh no, sorry, I'm wrong. She's probably panicking there, thinking no. So we'll do the motion first, and then we'll come to Nisha on the elections. So yeah, a little bit more from me, I'm afraid. So we've got a motion that we're proposing, and we'd like you to vote on today, and that's a rule change, which means that we need a 2/3 majority of those on the meeting to confirm this change. You may recall from previous meetings that we've talked about legislation that was passed by the outgoing Conservative government in 2003, which allowed credit unions to expand into new markets, in particular secured finance and also general insurance mediation. And so since that time, I've been working with a few people that I know in terms of partners in the technology space, in the car finance space, as well as a group of credit unions that are also interested in this opportunity, with a view to creating a CUSO similar to the one that I mentioned, the Soundpound Group, but in this case to support credit unions entering the car finance space. Some of you may have been aware of the story in the press at the moment about a bit of a scandal that's emerging in the car finance space in relation to commission payments and potentially large compensation payments that could be demanded if the Supreme Court rules in favour of the appellant in that case, but the plaintiff, I should say. But ultimately, we think there's an opportunity for an ethical alternative in this market. We also think there's likely to be an opportunity if that all does come to pass and there's a significant blow to the incumbents and because of their poor practice around commission in the past, with a need for a more ethical alternative, more transparent, and so on. So we think, and we know as well, that there are many hundreds of thousands, in fact, of people who don't get anything offered to them when they search for credit online through online marketplaces. And so the CUSO is designed to create a way for credit unions to access that opportunity and to offer their ethical alternative in the car finance space. And it relies on a new membership body that we're in the process of creating, which will support the financial well-being of its members, but would also be part of a mechanism to allow people to access car finance through this CUSO, regardless of where they are or who they are, provided they meet the criteria in terms of the credit lending that we're willing to offer. And so it's something that all the credit unions participating in the CUSO are putting to their members, so that we can then take this forward and create this membership body, which will be the basis of how we distribute this car finance proposition. It's very early days, and there's lots of water to go under the bridge. So just this change in itself doesn't necessarily mean that we're going to start doing car loans tomorrow. We are going to do a small pilot soon, but it will be on just to test some of the assumptions we're making about the market opportunity and the borrowers that there might be out there that we think we could support, and also to test some of the technology that we're proposing to use as part of the scheme. But in the long run, if we're going to do secured car finance, we'll need a new regulatory permission, for one thing. So that's going to take some time, and we'll need some of the larger credit unions to get involved to create the full CUSO that we're aiming for. So this is just a kind of necessary condition of delivering the model that we've kind of designed and we've worked on with the other credit unions involved. But there'll be lots more to come before this becomes a significant part of what we do. It's just about facilitating a new opportunity in that respect. Conscious it's there may be questions about that before we move to the vote, so I'll pause there if there are any.
There was just one. How much will this produce competition with Co-op Group?
With Co-op Group, I don't anticipate any competition at all with Co-op Group. As far as I know, they don't offer car finance. Neither do Co-op Bank, as if that was the intention of the question.
Yeah, if it isn't, please can you add some more to that question? And the last, I say last, we have new International Cooperative Development Fund being launched. Have we discussed with societies involved, which includes some of our payroll partners, if we can join? If we can join, they are looking for partners.
Perhaps I'll come back to that one, Jackie, if that's all right.
Yeah, no problem.
It relates to the motion, but yeah, I'm happy to come back to that in a second.
Yeah, no problem. Thanks, Matt.
Okay, so should we, unless there's any further on this one? I certainly don't think, in terms of the thrust of that question on the competition point, I certainly don't think there's any sense in which this is about us competing with other co-ops and mutuals. It's about us collectively across the credit unions participating, trying to create a way for us to provide a credit union alternative in this space, which, this case that I mentioned that's gone to the Supreme Court is an indication of the fact that there's many people not being well served by the car finance market as it stands, and we think we could make a positive contribution to that. We've gone through a process with our board, and they've challenged the proposals and met the partners, and and that's an ongoing process. that will continue if we get the approval we're looking for here in terms of this common bond aspect of it.
Okay, thanks, Matt. Yeah, I think you've explained a little bit more there. Thanks, Matt.
Yeah.
Happy to go to the vote.
Yeah, let's go to the vote. David told me I should be quicker, so we're conscious of that.
And Chris. So I'm just waiting for a couple more votes. It's been getting up to 84%. I know we need a majority on this one, don't we?
2/3, yeah, because it's a rule change.
Yeah. So we're up to 78% of members voted, and it's 91% agreed and 9 abstain. There's nobody against it.
Great.
Okay.
Thank you, everyone. That's good. So, of course, there'll be more information about this as time moves on with the CUSO. Okay. So, yeah, as I was getting mixed up earlier, but it is now the time I was going to bring Nisha on just to talk briefly about the elections and the recruitment process that we've been through. So, are you there, Nisha?
Hi, good afternoon, everybody.
Hi.
Hi. So I'll move on to the elections. At this time, we're proposing 2 new directors, in particular just to support the succession planning, because 2 of our senior directors, David Fowell, that's the chair, approaching his final 3-year term in January next year. And also our treasurer, Grant Mitchell, will reach the end of his final term in January 2027. So to support the succession planning, we are proposing 2 new directors to join the board, and both of the candidates have gone through selection recruitment process, which includes, I'll just briefly cover what that process is. And you may have seen as a member emails through the website to all members that addresses the roles and responsibilities for any non-executive director vacancies. And the next process would be to contact the CEO, Matt, for any expressions of interest, and then application process with a more formal structure to the application, which is having conversations with Matt, the CEO, the chair of the board, which is David, and myself, chair of the nominations and reward committee. And another option to that is to observe the board meeting, which both Basil and Helen have done. And then following that, if the interest is still there, is a co-option. I'd like to say a bit more about Helen and Basil, just summarising their election addresses, which you can access fully in the papers for the AGM. Helen's a risk management professional with over 20 years of experience in credit risk, governance and enterprise risk management. Currently head of risk advisory for Co-op Funeral Care, Helen previously worked in the unsecured lending sector for 9 years and has seen the impact of irresponsible lending firsthand. Keen to support ethical and responsible lending, Helen volunteered her expertise to the Co-op Credit Union and hopes to contribute further. Outside of work, Helen's a mum of 2 boys, and she's also a chair of trustees for a local charity which offers affordable childcare and support to a deprived community in Bradford. Helen's also served in various leadership roles at her son's football club committees. And just a few words about Basil. Basil's an Australian chartered accountant with over 40 years of experience leading internal audit, risk, compliance and governance teams across major financial institutions in both the UK and Australia before retiring to the UK. A strong supporter of the cooperative movement, Basil values mutuality and financial inclusion. Whilst this would be his first non-executive role, his extensive governance expertise equips him to challenge and mentor the executive team. Basil's keen to contribute to the Co-op Credit Union's ongoing success. And I can say both Helen and Basil are highly experienced in their commitment to the cooperative movement. Financial inclusion and financial well-being aligns well to the values of the Co-op Credit Union. What I actually should have mentioned at the start as well, if anyone's got any questions, if you want to drop them in the chat box, or if there's any questions that you have.
There's no questions regarding the elections at the moment.
Nothing.
You probably should just
A
move
minute.
to the vote then, should we? Conscious of I've taken up all the time whittering on. Sorry, Nisha.
No, it's fine. I've got no problem. I'm conscious of time as well. Are there any questions? Any comments
No,
or
there's
anything?
no, not regarding the elections, no.
Thanks, Jackie. Thanks, everyone. So before we move to the votes, no further questions. So shall we move to the votes?
Thank you. Just one comment, Matt, going back to the car loans, etc. Didn't Co-op Group quit car showrooms selling cars about 20 odd years ago?
Possibly it's before my time.
I don't remember them having car showrooms, but that's not to say that they didn't. But like I say, you're more that the car finance rather than selling cars, isn't it?
Yeah, some of my board colleagues with longer memories might be able to clarify.
Okay, so we've got 79% of the members voting for Helen, and it's a majority yes.
Fantastic.
And we'll go on to Basil. Which is put in Oxford and Swindon and Anglia region. Both had car franchises. That's supposed to be before my 46 years in the Co-op as well.
Yeah. Well, I'm pretty sure they don't anymore anyway. So.
Yeah. Okay, again, the vote for Basil, and 79% of members have voted, and it's a majority yes for Basil as well.
Okay, thanks everyone. That's great. And thanks Nisha for walking us through that those elections. The slides are going all haywire. Okay, there we go. Okay, so just very briefly now, conscious of time, I've been warned by former and current directors that the Friends of the Co-op Credit Union financial statements are in the papers. The credit union's lottery is run for regulatory reasons by a technically separate company, although the team of the credit union administer the day-to-day running of it, and it provides an opportunity for members to win a prize, and then the proceeds support the operations of the credit union, and it's been an established part of the credit union's operation for a long time. The statements are very simple. It's, about half of the the ticket prize funds that are raised each month go into prizes, and the other half are retained and paid to the credit unions as a grant to support credit unions operations. And it's overseen by a committee of the board with some independent members. So yeah, pause very briefly there for any questions that may be on that.
There's nothing yet, Matt.
No. Well, maybe we could move on, and then if there are any questions that do crop up at the end, then they could look them up there. So I'm going to pass it over to David now.
Okay, as many of you will know, every year we make an award. Graham Southall was one of the founding members and one of the inspirations behind the formation of the credit union all those years ago, and this award was introduced when he retired and stepped down from the board, and we've changed the way we do it. Historically it was recognising the contribution of volunteers, but until recently we made a lot of use of sort of volunteer labour actually in the office, doing things like loan applications and the likes. That we're now much more professionalised with a bigger team on the payroll. So what we've decided to do is extend the qualification for the award to include members and partners who have made a significant contribution to the credit union. And this year we are making the award, I hope he's still with us on the call, to Dave Appleton, a store manager in Warrington and a passionate cooperator. Dave has been promoting the credit union and what we do for many years, and we'd like to recognise that contribution by giving him the Graham Southall Award for 2025. Well done, Dave, and thank you very, very much for everything you've been doing over the years.
Dave is still with us.
Is he?
Yes, he is, yes.
Jolly good. Good. And that brings us to any other business. So is anything want to raise the hand to ask a question? Have we got anything left in the chat box or in the question list, Jackie?
It was just from recognition to Claire. Claire said, "Thank you so much, David, for those extremely kind comments. It's been my pleasure to be involved all these years." And then Chris carried it off, saying, "Claire is a star and is much loved and valued. Happy retirement from the credit union."
Thank you.
To mention
Excellent.
those as was nice. David said, "Thank you. It's an honour for the award. Dave is fantastic. Well done, Dave." But it's mostly nice comments. All the questions have been covered. There was nothing outstanding to go back to. Was anything new comes in?
About the development fund or something? Could you maybe remind me it was
The
on
what?
the
Sorry, Matt.
We were doing the motion earlier, and you asked a question that I said we'd
The
come back to.
International Development Fund, was it?
Yeah. Could you read that out again, just to remind me?
Yeah. We have the new. It's from Tom. So we have the new International Co-op Development Fund being launched. Have we discussed with societies involved, which includes some of our payroll partners, if we can join? They are looking for partners, particularly as there is an opportunity for the fund to not just issue grants but loans and equity, which can in some way be quite empowering and money regenerates.
So that's news to me. I mean, perhaps offline, Tom. I think you said it was Tom that asked the question.
Yeah.
We could have a chat about it. because it sounds interesting and certainly something that we would want to explore, but not something we've looked at yet.
Yeah, I'll make sure you get all the information, Matt.
Yeah, don't worry. I know where to find Tom, so I'll drop him a line.
No, that's great.
Okay.
That's it. It was only
Okay.
launched 7 weeks ago.
Nothing else there, Jackie?
There's nothing else there, no.
In that case, we'll bring the meeting to a close. Thank you to everyone who's attended. As I say, this is your business. It's for you. So we'll see you next year in what will be my final AGM as I stand down from the board. So one of the things that we'll be doing over the course of the next year is looking at our recruiting who will be our next chair. So if anybody is interested out there, let us know. See you in a year's time. Thank you very much.
Thanks, David. Just one more
Thanks,
comment.
everyone.
Thank you for a very positive and informative AGM and for all you are doing. A nice note to end the AGM on. So
Thanks, Jackie.
enjoy the rest of your afternoon, everybody. Have a good weekend. Thank you.
Thanks.
Thanks,
Bye.
guys.
Bye.
Everyone.
Bye.
Bye.